Greetings all and welcome to Purple Trades. If you are regularly streaming YouTube, this is one topic that you might have come across via different mediums. You might be watching a funny video or any other video and you might have seen a lot of people endorsing about digital gold in the recent times. So all of a sudden digital gold has become very popular in India. Today we are going to talk about what is a digital gold, why there is a lot of hype and promotion about it, and should you be shifting from physical gold to digital gold or not. We will talk about this in detail in today's video. So in today's video we are basically going to discuss about what is digital gold, what are other types of digital gold investment, should you invest in digital gold, or are there any better alternatives of it. So let us start the discussion and let us learn in detail. So generally there are four ways to invest in India. These are the four most popular ways to invest in India. Apart from these four ways, there are many other indirect ways, but to directly invest in gold, these are the four ways in which you can invest in India. First and the most popular is buying physical gold. You just go to the shop, buy the gold, come back home and store it with you. Second form, which is picking up popularity these days, is digital gold. And third is sovereign gold bond, SGB. We will discuss about SGB also today in detail. And the fourth alternative is gold ETF and mutual fund. So let us look at all these one by one and come to a conclusion which one among these four is a better alternative. Before we start talking about these four types of gold, let us first talk about few facts about gold market in India. Now, Indians are obsessed with gold, and India is one of the highest importer of gold in the world. We basically use gold in almost every occasion. So we offer gold in weddings, festival or any other auspicious occasion. But due to COVID situation in India, people are trying to prefer digital gold, and hence this sudden boom in digital gold market. Now because of the pandemic that we are having, the wave 2, a lot of people don't prefer going to the shop and buy the gold, but the craze of gold in India is so high that they want to buy it in one form or the other. So if not physical, a lot of Indians are now opting for digital gold. So today when I'm recording this video, it is Akshay Tritiya today, and a lot of Hindus buy gold on this particular day. Let us first talk about physical gold that we buy. So here are few risks associated with buying physical gold. As we know that buying gold and keeping with us is very very So here are few basic points. If you hold physical gold, then there is an always risk of authenticity. The gold that you have bought, is it authentic or not? There is always this question mark. If you buy it from good branded jewelry shops, then yes, of course it will be authentic. But if you buy it from a local gold shop, the authenticity is always a question mark. Second, storage and security. Suppose you buy a good amount of gold, there will be always this storage and security concern to where to store this gold. Third disadvantage of buying physical gold is liquidity. When you buy the gold and when you want to sell it, you will again have to go to the shop, check the prices, and whatever prices that shopkeeper is willing to buy at, you will have to buy at that particular price. So liquidity is a very big issue when you have bought a physical form of gold. And fourth, especially COVID in India, because of this pandemic that we are going through, a lot of people are not preferring to buy physical form of gold in current situation. So the alternative is digital gold. Let us look at what exactly is digital gold. So digital gold is basically gold provided to you in the form of digital format, basically like a top up in your wallet. So currently there are only these three companies that are providing digital gold in India. That means they accept money from you, and in return they give you a small top up on your wallet that you have bought so many grams of gold. And in case you want to actually have a physical delivery of it, you can definitely do that, or it will stay in your wallet. So the first company that is providing digital gold is Augmont. This is the website of the company. Second company is MMTC and PAMP. This is basically a joint association of MMTC company from India and PAMP, another international company. And third is a Safe Gold. This is another company. All these three companies are from Mumbai itself, and these are the only three companies that are providing digital gold in India right now. So how do you buy digital gold from these three companies? So here is the buying process. You can either buy directly from the mentioned website or their distributor. So basically you can either go to the mentioned website, make a purchase on their wallet, or there are a lot of popular distributors of these three digital gold providing companies. Now majority of the vendors who provide digital golds are all distributor of these three companies itself. So if a brand or a broker is claiming that they will be giving you digital gold, they are basically the distributor of these three companies itself. So I'll name a few popular distributors who are distributing digital gold by tying up with one of these three companies. So these are the list of companies: Google Pay, Phone Pay, Paytm, Grow, Upstocks, and many more, right? So there are a lot of redistributors. So when you buy gold from either Google Pay or Phone Pay or Upstocks or Grow, it basically means that these distributors are reselling the gold by buying from any of those three mentioned websites, and that gold is reflected in your wallet, or also called as your digital locker. Now, why is digital gold becoming very popular? Because of these advantages associated with digital gold. First, authenticity. There is no doubt of authenticity. The digital gold that you purchase is 99.9% pure. And second advantage is security wallet or locker that they provide. So there is no issue of storage or security anymore, because the gold is secure in your digital wallet, which is in your mobile. Third is liquidity. You can buy gold anytime and you can sell it instantly without even going to the shop. And fourth advantage, of course, the COVID in India. So if you want to buy gold, you can directly buy from your home, starting from just 5 minutes. You can set up your wallet in just 5 minutes, and because of this COVID in India, you can definitely buy gold sitting at home. Now, if I compare the disadvantage of buying physical gold and advantage of buying digital gold, they are exactly the same. So these are the disadvantages: authenticity, storage and security, liquidity, and COVID in India. And what are the advantage of digital gold? Well, exactly the same: authenticity, security, liquidity, and COVID in India. So whatever were disadvantages of physical gold became advantage here, and that is the reason digital gold is becoming very, very popular. Now, apart from these four advantages, there are many other advantages of digital gold. The other advantages are collateral for loan. That means if you have gold in digital form in your wallet or in your locker, you can use that as collateral to take a loan. Second is the low investment. It means you can buy gold for as low as 1 rupee or even 10 rupees or even 100 rupees, which is not possible when you're taking a physical form of a gold. In physical form of a gold, you will have to either buy at least say 0.5 gram or 1 gram, so forth and so on. But here, even if you have say 100 rupees, you can buy gold worth 100 rupees as well and keep it in your locker. Third, you can track price very, very easily. So since most of the lockers or most of the distributors who are reselling the digital gold will definitely give you the price alert via SMS or mobile notification or even by email alerts. So you can track price of your digital gold very, very easily. Fourth advantage is that in case you wish to convert this digital gold into physical gold, you can opt for physical delivery, and a home delivery of that particular amount of gold will be arranged. So you need not go anywhere. The physical form of gold will directly come to you in case you wish to settle it physically. So these are other advantages of digital gold, and because of which it is picking a lot of popularity. So now you may ask, are there any disadvantages of digital gold? Well, the answer is yes, there are a lot of disadvantages. Let us look at them one by one. So the disadvantages of digital gold, first is you can buy only gold worth 2 lakh rupees. So there is a limit of 2 lakh rupees with most of the companies. Few companies do allow you to go above 2 lakh rupees, but with most of the distributors the limit is of 2 lakh rupees only. Second disadvantage is the delivery charge. In case you want to settle it physically, you will get a delivery, but the delivery will be charged separately. Third disadvantage is you will have to pay 3% GST on the digital gold that you buy. For example, if the gold is running at 50,000 rupees, you will have to pay 3% on that 50,000 rupees when you're buying 10 grams of gold, or even if you're buying gold worth 100 rupees, 3% GST is already included. Whenever you're buying gold, you're already down by 3% because of this GST. And the fourth and the biggest disadvantage of buying digital gold is spread and commission of these distributors. So these distributors sell the gold at a little higher price than the actual market price and buy at a little lower price than the actual price, and this difference is called a spread. Apart from spread, they also have a very big commission, which approximately is around 3 to 5%. So roughly, when you buy digital gold, you are spending 3% on GST and 3 to 5% on spread and commission. So approximately 7% extra you are paying when you're buying digital gold. So the gold which is of say 50,000 rupees, you're actually buying it at 53,500 rupees when you're opting digital gold. So you're directly down by 7 to 8% already when you buy even gold of say 100 rupees as well. Now that we have understood that digital gold is a better alternative of physical format, are there any better alternative of digital gold? Well, yes, there are two other alternatives which are much better than digital gold. The best alternative of digital gold is SGB, sovereign gold bond. Now what is SGB? Well, these are the bond issued by government and they pay 2.5% coupon annually. So that means whatever gold price is running, if you buy the bond at that particular price and keep it for years together, apart from returns on the gold, you will get extra 2.5% interest on your bond annually. So that means you are risk-free, earning at least 2.5% on your investment. You can buy this bond at issue price and sell at market price and earn interest till the time you hold. So basically you can buy this bond at any time when it is issued, and whenever you wish to sell, you can sell it at the market price if the seller is available, and the holding period, so whatever time you have held it, you will earn interest on it. Also, on purchasing this bond online, you get 50% off on current market price of the gold. For example, if the gold price is 5,000 rupees per gram, you just have to pay 4,950 rupees per gram. So in digital gold, if we compare, we had to pay around 7% extra on the current market price of the gold. Here, you are paying 50 rupees less. Apart from that, you're also enjoying an interest of 2.5% return extra. Where to buy? You can buy it via exchanges like NSE or BSE, or you can also buy it via public banks like State Bank of India or private banks like ICICI Bank, HDFC Bank and any other bank. So sovereign gold bond or SGB is a much better alternative to digital gold. The advantages of SGB: first, as I said, 50 rupees off on CMT. Second, 2.5% additional interest on whatever returns you get on the gold. Third, there is no GST. You need not pay any GST at all. Fourth advantage, there is no spread and commission. So of course government will not charge you any spread or any commission. So you're saving on GST, you're saving on spread and commission, and the best advantage is you make 2.5% extra returns on your principal. So other facts about SGB is that you can invest in multiple of 1 gram. So if you want to invest 1 gram, 2 gram, 5 gram, 10 gram, doesn't matter. You can invest in multiple of 1 gram as well. Second, premature withdrawal is after 5 years. That means minimum period that you will have to hold this SGB is at least 5 years. You cannot withdraw it before 5 years. You can transfer it from one person to another person. If you have a seller available, you can sell him. But if you don't have any seller available, you will at least have to wait for 5 years. Actual bond tenure is 8 years, and if you hold it for entire 8 years, whatever capital gains you have made, you will have to pay zero tax on that. On the coupon interest, on the 2.5% interest that you are enjoying, you will have to pay taxes, of course, but on the capital gain, you will have to pay zero tax. For example, you bought a bond at 10,000 rupees. After 8 years, it has become 20,000 rupees. You made a profit of flat 10,000 rupees. So the 10,000 rupees profit that you have made, there won't be any tax on it. Fourth advantage, as I said, of course, there is no spread and commission. So the reason why a lot of people don't opt for SGB is because of this tenure that they will have to hold. So either they will have to hold at least for 5 years to do premature withdrawal, or for a complete tenure, it will take 8 years. Now people think, who will wait for 8 years? I want a more liquid solution, and because of which digital gold is picking up popularity. But if you think wisely, in buying digital gold, you're paying around 7% extra. In buying SGB, you're paying 50 rupees less and also enjoying a return of 2.5% extra. So if you have a mindset of long term, you can definitely prefer SGB over digital gold. Apart from this, if you want an alternative which is in between, that means which is cheaper than digital gold and also providing you less time frame to hold, the fourth alternative is gold ETF or mutual fund. Now gold ETF is basically an exchange traded fund listed and traded on Indian exchange. You can buy and sell gold ETFs just like you buy and sell shares. So you can buy at whatever time you want, and you can sell at whatever time you want. It is very liquid. There is no compulsion of holding gold ETF for any period. You can hold it for say 1 week, 1 month, 1 year, doesn't matter. Whenever you feel like, you can square it off. So where to buy? Of course, you can buy it from your trading account or a demat account like Zerodha, Upstocks, Grow, on exchanges of NSE and BSE. So the advantages of gold ETF are: invest any amount. You can invest absolutely any amount, 100 rupees, 1000 rupees, 5000, it is up to you. Second, withdraw anytime. There is no need to hold it for years together, just like SGB. Unlike SGB, you can withdraw it anytime. Third advantage is that there is only 1% tax and commission. Remember, digital gold, there was 3% GST plus 5% commission. Here, including tax and commission, it is just 1%. Fourth advantage is gold ETFs are very liquid. That means you can buy anytime and you can sell anytime, and money will be credited into your demat account instantly. So here are the 4 things that we have seen. First is physical gold, risky to handle, costly, illiquid, taxes and commissions are extremely high. Second is digital gold. Well, you have secure wallet, highly liquid, can be used as collateral, home delivery is available, but there is 3% GST add-on, there is 3 to 5% spread and commission, and no guarantee on safety. Why? Because digital gold is neither monitored by SEBI nor by RBI. So in case you are trying to pay for a digital gold and your transaction fails, money is debited from your account but not credited to these wallet companies, well, there is no guarantee. If they don't deliver you the digital gold, you cannot fight against them. Third form that we have seen is of course SGB. 50 rupees off on CMP, tax benefits if held for 8 years, 2.5% additional interest you will earn annually, no spread or commission or GST, secured by Government of India. Disadvantage, of course, waiting period too high, illiquid and difficult to sell. Fourth, gold ETF and mutual fund. You can invest any amount, easily buy or sell on exchange, highly liquid, only 1% tax and commission. Safety by SEBI, can be used as collateral, but of course in gold ETF also you will have no tax benefit. So if you are looking for tax benefits and if you can wait for good amount of time, SGB is a good alternative. But if you want to quickly enter and exit, then gold ETF and mutual funds are a good solution. In no case I would recommend physical gold or digital gold as investment. So the hype that you see in the market right now about digital gold is because these distributors want to make money by spread and commission, and because of which they are paying high amount of money to these YouTube and Instagram influencers to promote digital gold so that they can make money. But If you're smart enough, you should either go for SGB or gold ETF and mutual fund. Say no to digital gold and say no to physical gold as well. Thank you so much. Spread knowledge cause it's free. Do subscribe to our channel, and if you like the content, hit the like button and share it with your friends. I'll see you in another video. Thank you so much.